I hate to be one of those guys that does spoilers. Nobody likes that guy. Did you know Snape killed Dumbledore? I believe that's kind of an old spoiler, but I've got a new spoiler for you. See, Star Wars The Last Jedi is about to enter theaters, and that Last Jedi, it's me. I'm Cody from Wall Street Breakdown. Don't I look like a Jedi? Probably not. Probably dark side more than light side, but it is what it is. But Disney today, the makers of the Star Wars franchise, now that they've purchased all the George Lucas stuff, years back, they came to an agreement to purchase the TV and studio assets from Fox. That's right. Now, we were hearing the assets were valued between $40 and $60 billion. It turns out they paid that top-end number of around $60 billion. Now, we know that Disney's got a streaming service that's going to be coming to market in a very short period of time, and content is ultimately going to be king. So getting all of these Fox assets under management is definitely going to help them broaden their horizons when their streaming service goes live in 18 months or so. They want to get all this stuff organized and make sure that they've built up all this Fox humdrum so that people out there will be excited about not just seeing the regular Disney content that's already out there, but now bringing in content for more mature audiences as well, and spreading out the breadth of their reach a lot more to bring in customers that might not be as keen to just see the stuff that Disney does, even though, as we know, Disney does fantastic work. Their movie Coco has been #1 at the box office for 3 weeks in a row now. So even while cinema sales, the ticket sales are down overall, Disney's doing quite well. And we can only imagine that Coco is probably going to hand off the first place baton to The Last Jedi. Now, when we look at Disney as a stock, they have underperformed the market pretty significantly the last couple of years. And it wasn't a whole lot better even today off this news. Disney closed the day at $107.61. That was only up 0.16% on the news, but they are breaking some trend lines. So I think a lot of analysts out there think that Disney could finally start to be working its way up. In this calendar year of 2017, Disney's only been up 3%. And then when you compare that to the S&P 500 index, that's up 19%, that is really underperforming. Again, the S&P 500 index has been up 19%. That's in the value of the shares, not including the dividends that you're getting paid as well. Everybody that's out there muddying around in Bitcoin waters, I'd just like to show you a little bit of actual growth in something that's a lot more tangible, just in case you're paying attention. So the big question now would be for Disney is CEO Bob Iger going to stay on through this transition? We can imagine he probably will, but he did say when he signed his final contract that this was the last one. Will it be the last one? We'll have to see, but you can only imagine with ESPN going to streaming next year, Disney going to streaming the year after that, and now all of these assets from Fox being brought in, that Bob Iger is probably having his rubber arm twisted into staying in control and building his legacy at Disney even further. I wouldn't blame him for staying on. In fact, I would imagine Disney shareholders want to see Bob Iger stay on as well through this transition. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, notification bell, thumbs up for this video, all videos, thumbs up for Star Wars coming out. Even I'm going to go check that one out. And comments. Let us know what you think. Did Disney overpay at $60 billion for Fox's assets? Or do you think this transition is going to work quite seamlessly as Disney gets into the streaming business? Let us know in the comments section and have yourselves an outstanding rest of your Wednesday.